much, lady and the two gentlemen. Okay, thank you very much, lady and the two gentlemen. So we have a rose among the thorns here today, and we cherish the women, and happy Women's Month to you, Sisi. The very first question that I'm going to pose to our panelists is to just for them to opine on what has been going on today and to hear your views, judging from the discussions around the railway needs, the intricacies around the funding, the challenges that the railways have experienced over time, and but we are going to talk about the region and not necessarily South Africa. So we will go beyond just the Southern African region, just to understand the bigger picture. So having listened to all of this, I'd like you to just tell me really, if you listen to the challenges, theft, so there's theft of the infrastructure, there's infrastructure, but there's thievery as well that goes on. There's lack of maintenance that makes it even more difficult to fund. What in your views, and I'll give each one of you 5 minutes to just talk to this point, what in your views are the actual funding challenges facing SADC region at this point within the railway space? Thank you.
Thank you very much, Cleo. I will not purport to be an oracle that knows everything, especially about railways, because we are on the banking side, so we tend to receive and consume the information as opposed to being the ones that are at the coal face of the problems of operators. Be that as it may, our main business when banking a railway transaction is to understand what are the risks that are involved in deploying or investing in it, and therefore how do we price for that risk that we are running, but more importantly, what are the main issues that will lead this funding not to be repaid. It's as simple as that. It could be a lack of maintenance that drains cash flows out of a company and they cannot repay. It could be the railway is uprooted and therefore there is no activity and now we cannot be repaid, and so on and so forth. So ours as a lender is to conduct a due diligence and understand those risks, price for them, and determine whether we want to invest or not. If we venture into playing into their space, that's when I think we'd be overplaying ourselves.
Thanks, Cleo. So, from our perspective, I'm with the Export Credit Insurance Corporation of South Africa, which is South Africa's export credit agency. So our mandate is to facilitate South African exports. We do that by supporting the South African manufacturers, and every transaction that we support is tied to South African content, and we don't look at anything domestically as such, but we're looking at projects that are going, cross-border risk and covering the risk from a political and commercial perspective. So we work with the manufacturers as well as the financial institutions like the DBSA, commercial banks, and various project sponsors if we're looking at a PPP structure. The assessment that we do is similar to what the banks would do, but when we are looking at projects, and I had to go into our pipeline to see the queries that we have, and when I look at where we are at the moment, we've had more energy projects and very few rail and infrastructure projects. Yet obviously when we look at the continent and indeed the region, we know that there is demand and there is a lack, and there's a need for financing and more investment in that sector. So where I see the challenge is not so much the need. We've all agreed that there is an opportunity. We have the financiers, but I think where we see more of the gap from our perspective is the bankable projects. We do get inquiries, but they're not yet at a stage, at a bankable stage. We do not have a lot of players that are providing financing to develop the projects to get them to bankable stage. I know that DBSA has a program. We also have a stake, a shareholding in a Frexim Bank, and they also make a contribution in that regard to get the transactions or to fund for project preparation. But that for us is what's hampering the transactions, because there are good opportunities, and yes, we can all see the economic benefits, but without a viable business business case, it's very difficult for us to jump in and so on.
So yeah, I'd just like to follow up on that. So in your mind, are the projects not being properly structured? Are they not being properly packaged so that they don't meet the standard of your funding requirements, and not your funding as such, but your insurance on your part and the funding on the part of the financiers? Is that the problem? Are we seeing that there is a skills gap in terms of that? Is that what you would say?
I think definitely not so much a skills gap, but you need the type of projects for infrastructure development. It needs governments to get involved. The priorities for sovereign are a lot. So I think when I was looking at stats, you see lots of energy projects. Obviously, we've got an issue with power in our region, so that's where probably most of the focus has been. You look at water treatment plants, etc., etc., and then not that there isn't a requirement for investment in infrastructure and in rail and so on, but it's trying to I suppose prioritize what they can with the little resources that they have, and so it's not so much the skills, but it's the funding required to make that investment. And then you also have the financial institutions. In our case, as the ECIC at present, we're only limited to covering South African financial institutions. So when you also look at the banks, they won't look at a transaction until it's at bankable stage. If we're looking at in South Africa the resources that we have, it would be maybe DBSA, and if we're looking in SADC, a Frexim Bank, and maybe AFDB coming in with the project preparation funding, they can only do so much. Then you also have the sponsors, and they will prioritize based on their appetite, not necessarily the needs of the region. So it's...
What are your thoughts?
Thank you,
Just
Claire.
on that line, thanks.
As Portia represents South Africa ECA, I represent the UK ECA, and that's really to support the UK export market at the end of the day. We provide long-term funding, and I just need to provide the context thereof. Pardon me. Provide long-term funding of 15 years plus construction periods, where we do need, it's tied funding, similar to Portia's side. It's tied funding, but we only require 20% UK content within the overall structure, and I think that's very important to note there. To answer your question, to get to that, where I see there's, from a rail point of view, there's a lot of competing projects, and a lot of competing projects within each and every country itself. A lot of infrastructure I look after Southern Africa, sorry, I should just mention that too from a UKIF point of view. So it's all countries east and south of Angola through to Mauritius. And what I see, particularly in Southern Africa, a lot of infrastructure related projects that's required. And the rail corridors, it's just another project or projects that are in competition of government funding, really, at the end of the day. And they're competing. And we here today are talking about rail, very concentrated focus on rail. But when you actually go back into speaking to the ministers of finance and the debt management officers, it's clear to me that they really got competing projects that they need to say which one is the most important. Rail is, in my mind, or to my mind, is very important because it unlocks the economic value of the countries. If there's a sufficient or efficient rail system, obviously the cargo can get to the ports a lot quicker, and from that point of view, I think it's very important to have an efficient rail system itself. The other thing that I think is also very challenging is that there's cross-country corridors that are being spoken about. And I think each and every country's got their own economies to protect. It's got its own difficulties to navigate around. And then on top of that will also be the things like in which or what law will be relevant on their side. What currency will it, be the lending be done? So there's really it's a complex system, and if you go cross-border, I believe it's even more complex on that side.
Thank you very much, Dirk. I think just to maybe be sure that I'm getting the right point here, you're talking about harmonization of policies as one of the key factors that would unlock the appetite. What else, in your mind, from an international finance standpoint, makes African rail projects attractive or unattractive to a global investor, that is?
Yeah, there's been a lot said about viable projects today, and I think a project needs to be viable. We, as ECIC too, but any export credit agency at the end of the day, will work with commercial banks, will work with DFIs, because what we really do is we provide the guarantees, support. The commercial banks will provide the liquidity. We will bring in the UK's AA rating, therefore the margin will be compressed, and it will become cheaper, and we also extend the tenor. So from that point of view, we'll always work with the commercial banks as a whole. We always look for the opportunity to look at the viable projects. The ministers of finance are always inundated with, you need to sign a ministerial guarantee to support the SOEs. And I think in probably 95%, if not more, maybe 99% of the cases, that's true for any SOE and also any rail operator that will need the ministerial or Minister of Finance guarantee for that facility. That is quite important. One needs to know as a lender, will the Minister of Finance support that or not? Is it a viable project at the end of the day? And if it's based on a concession, is the concessionaire obviously credible? Is it longer term? We were talking earlier today that there's concessions of 1 year to, I think it was 10 years. That's a very short period of time for the people to actually fund that project, fund the rolling stock and the like on that. So there needs to be certainty, and from an investor's point of view or from a lender's point of view, you need to have certainty that your repayment or your loan will be repaid at the end of the day. We are no net cost to the UK taxpayer, which means we need to be invested in viable projects at the end of the day. So we don't want to take on losses. Do we take on losses, or do we incur losses at times? Yes, we do. But if it's with the government on the other end, we've got a very long, we've got we'll earn it back over a long period of time. A patient balance sheet. That's really what I want to say.
Thank you very much, Dirk. Is there a question on the floor at this point? If there's anybody who wants to pose a question, if not, then let's continue. And I would like to ask a question to you, Brian. DBSA has been central in financing infrastructure projects. You finance infrastructure projects in the country. You are also in the region. At this point in time, could you just please tell us how do you approach structuring rail expansion projects in particular to balance financial sustainability and development imperatives like trade facilitation and regional integration?
Thank you for the question. It's a very it's an important question because it's at the center of what we aim to achieve, if not answer, is how do we reach development objectives on the one hand, and how do we support projects that are sustainable and commercially viable. Now that will spew out how you look to structure it, but the starting point is we understand that the railway sector is a long-term game, so you will rarely find a loan or a repayment period less than 15 years. So already we know we are playing in the 15 to 20 year space, if not 30. That's in terms of repayment. So that means that for that period you need to be certain with what will happen to a large extent, not everything, but to a large extent, which means that you have to have all the questions answered. Where is the market? What commodity are we moving? What environmental risks are we running? Do we have an operating company that has got a good governance framework that will be trusted with operating over this period? Do we have a stable environment? Have the laws changed? Etc., etc. So in a nutshell, what I'm saying is, what I've found is that a lot of operators and potential borrowers underestimate the level of detail that a due diligence exercise goes into. It literally goes into how many trains per day, how many drivers do you have employed, etc., etc. That's how deep the due diligence goes. But the long and the short of it is, through the due diligence, and normally, I mean, with colleagues out of a financial model of some sort or projections, you will come out squeaky clean, and you will then come up with terms and conditions and hopefully proceed to finance a project. But the point is, on day one, you're all looking at repayments in a 20-year horizon. It's seldom, if somebody is financing railways in the 5 to 10-year game, they are not in the space. They shouldn't be, in the railway space at all.
Thanks, Brian. Just as a follow-up question to that, I'm assuming that as a lender, DFI, you wouldn't be going into this road alone. You'd syndicate your loan with other commercial banks, de-risk it, get a bit of money from the actual railroad itself. At this point, I'd like to talk about what the minister and I think the Freight Rail CEO talked about today, the fact that Transnet Freight Rail has, and the other railways actually in the continent, are going the route of having the divisionalization, having the asset owner as well as operators. And to that effect, 11 operators have now been shortlisted to run freight on SA railroads at this point. So in my head, I'm thinking that, okay, so these are operators, they'll bring a locomotive and they'll put it onto the railroad and move on behalf of their customers. The assumption is that this railroad is in perfect shape. Otherwise, I wouldn't be that customer giving these guys that. What are your views on that, knowing the state of the rail today?
A person once joked and said, and maybe it wasn't a joke, but they said the last railways that were built was in the time, or last significant railways that were built was in the time of John Cecil Rhodes. But that's the point, is that the infrastructure is old. Having said that, many governments are revitalizing their new projects, targeting evacuation of minerals and cargo in certain corridors. So the issue is not necessarily the railway is old. I think the point here is to find a model that says, how do you maintain a railway network over an extended period, and how do you recover that from the actual user? Because the railroad should not be incurring, in my view, that cost. If it's serving a bulk user for an extended period, the operator should recover the maintenance in some way, as a little maybe in a tariff, and that could work two ways, where on one side the railroad guarantees availability and standard of the railway, on the other side the other one commits to paying and to using that railroad for that period that it's been designed for. So in my view, it can be a win-win, but it just has to be modeled in a long run to say, how do you recover on one side and what do you commit to on the other side?
Fantastic, ma'am.
Yeah, I agree with that sentiment, and I think maybe learnings from ECIC perspective for transactions where we've provided support. I think it's always important to define the roles of the different players, who's responsible for what, who's going to be maintaining, and when you establish a project, who is responsible for services, and have you included services and maintenance in that initial contract. I think we've seen that in projects that we've supported in the DRC, not necessarily for this model, but where you have a client who comes in and they procure wagons and locomotives, and then there's no attached services and maintenance contract. When the equipment is run down or is broken down, you cannot get payment out of a client. They won't pay for something that's not operational. So I think it's an interesting approach to me, but there has to be some kind of, in my view, I think it's more effective if there is some kind of a cohesive and a coordinated approach. For some things, I think it's a little bit more difficult to almost divide responsibilities in that manner. Yeah, I would be a little bit more skeptical, and I would like to see probably a more cohesive and coordinated approach.
Okay, Dick, from your perspective, what are the non-negotiables the UKEF looks for before backing a rail expansion project?
Yeah, so a couple of things. So UKEF is the ministerial government department of the UK government. So we've got to follow UK laws. We've got to follow UK principles at the end of the day. And one of those is that we're not allowed to enter into the fossil fuel market at all. So we can't provide funding for coal or coal corridors itself. So unfortunately, that is a not negotiable for us to start off with. And then the other not negotiable is there's always got to be UK content involved. I mentioned it earlier on, it's 20%, which is a very low threshold compared to other ECAs in the market. It goes up to as high as 100% for certain ECAs. So the 20% is also, it's tangible goods and or professional services, fees, or even intellectual property. So you always need to find a component of UK content in that. But I think it's also very important to note that the fact that it's UK content does not mean that it needs to be a UK contractor that's involved. It can be any EPC, it can be any nationality, any country, EPC itself. They just need to source UK equipment or UK content or goods from the UK itself. And then, again, as a not negotiable and as a little bit tongue-in-cheek, we obviously need the repayment stream to be there. But UK content, and then obviously a good balance sheet or a strong borrow at the end of the day, I would say.
Okay, just a little follow-up. Is there scope for yourselves to work together with the ECIC and the DFIs?
Yeah, so you know, we always try to work together, and you know, ECIC obviously does everything outside South Africa and into Africa, in which Africa is a very strong focus area for us as well. As I mentioned, you know, I represent Southern Africa from a UKEF point of view, but I've got contemporaries in West Africa, in East Africa, Egypt and Morocco as well. And there we always try to work with other ECAs. You know, we would love, I think, we have done work with ECIC in the rest of Africa too. And then I think that there's definitely a strong move for us to work closer with DFIs. Very different mandates between ECAs and DFIs, but they are complementary at the end of the day. Where we could enhance the rating of the DFIs even in the countries.
Thank you very much to our beautiful panel. I see the program director is already standing there pushing me, even though I do have 3 minutes. In one sentence, what would be the one bold idea you champion today to secure rail expansion in Africa's future?
Well, I'd probably give more attention to project preparation and prepare better projects.
100%, and maybe that cohesive approach, because we can't keep talking about Cape to Cairo, and every country is pulling in its own direction. So we do need a coordinated approach across the SADC region, and then further up into the rest of sub-Saharan Africa.
Yeah, I would say definitely consider ECA funding as an alternative source of funding and an additional source of funding. It's horses for courses, but it's definitely should be in there at least to be considered.
Thank you very much to our beautiful panel. Could you please give them a round of applause, ladies and gentlemen?